Greetings, everybody. Ed Yardeni here. It's September 2nd. It's Tuesday. I hope you had a great long weekend, holiday weekend. Summer, I guess, is not officially over, but it's basically over. Kids are going back to school, and the market is focusing on September. And September has a reputation of not being such a great month, and so far so bad. We're starting off on a foul note here, and we actually, speaking of notes, we wrote a quick takes uh, over the weekend that we sent you, where we said that we may very well have made a top in the market last week, and that September could be a rough week up ahead here. Jim, you there? Hey, Jim, how are you?
Hi, I'm doing well.
Good.
Ready to
Jim,
join with it.
Jim, just do exactly that, and I'll invite you in a few minutes after I kind of go over things. Jim is joining us. Jim was with us a few weeks ago and very uh, accurately predicted that Jim, you want to just turn your video off, and then
Sure.
I'll call you in. Thanks a lot. Um, Jim did a great job for us of predicting that the appellate court would probably rule against Trump's tariffs. And so, we've been calling this thing Trump's tariff turmoil, and I think the concept still applies. It's still a mess, especially now that the court has ruled that, I guess by 7-4 decision, that Trump's tariffs, most of them are not legal. Some are okay, but most of them are not legal and not constitutional. And now the question is, where does it go from here? I think everybody expects to go to the Supreme Court, but we'll have Jim on in a minute. I just want to go over a couple of things here. It is September. Let me start off with the charts if I can find them. Of course not. Let's see. I had it here a minute ago. Let's try this one. Okay, it doesn't look like I'm having any success this morning. Just bear with me one more second. Let's try this one. No. Okay. So I'm not going to continue to fool around with this. Let me just get right down to it. Thinking that the market may very well have peaked at the beginning of, at the end of last month, and that this month could in fact be a troublesome one. It has been that we have a chart that we showed you about the 10 past years, and over the past 10 years, September has been a downer, and looks like it's going to be that way again for a few reasons. One is everybody's got excited about the Fed cutting rates on September 17th. That's still certainly a possibility. But on the other hand, there's still some data to come out that may dissuade some Fed officials from voting for a rate cut. And the question is whether it'll be a majority. I think either way, there's going to be dissenters. Looks like Muran is going to be confirmed by the Senate probably on Thursday as the Fed governor, at least on a temporary basis. So there'll be three dissenters for sure if the FOMC surprises everybody and decides not to cut rates. The market, the Fed doesn't usually like to surprise the markets. So right now the markets are expecting a rate cut, obviously, on September 17th. But we did have data coming out suggesting that the economy is doing all right. The personal income data, as well as some other data, led the Atlanta Fed folks to raise their estimate for real GDP in the in the third quarter to over 3%, and that follows a upward revision in real GDP in the second quarter from 3% to 3.3%. So, it's hard to argue here that we've got a recession issue. The question is, do we have a weak labor market? And we'll see how that plays out. We did have the Consumer Conference Board the consumer confidence data, which was put out by the Conference Board, that did come out for August, and it showed basically not any big deal change in the jobs plentiful, jobs hard to get. On balance, it was a little bit softer, but still, all in all, jobs remain available. So tomorrow, when the JOLTS report comes out, we expect to see that again, job openings should remain rather plentiful and kind of consistent with a 1-to-1 ratio between job openings and the number of people unemployed. And a ratio of 1.0 is a pretty good ratio, historically speaking. It suggests the labor market is in balance and that there aren't a lot of people looking for jobs that aren't there because the jobs are in fact there. We know from initial unemployment claims that layoffs remain very low. From continuing claims, we know that the duration of unemployment has increased. People are staying unemployed longer. It is getting harder to find jobs for some people. And it seems that a lot of those people that are having a difficulty finding jobs happen to be teenagers and people coming out of college. Some of that may be AI related, possibly, particularly people coming out of college. Maybe employers are not quite sure what AI is going to do for them. They're not quite sure if it's going to replace workers, augment the productivity of the workers they have now. So maybe that's dissuading them from hiring some of these college grads. We've also discussed before that it's unfortunate that college costs so much and that so many of our kids seem to be taking degrees that aren't very specific, things like communications and management and business, very vague kind of degrees, not physics or material engineering and so on. And so there's a lot of them with those kind of degrees, and that may also create some problems in the labor market. These are not issues that the Fed can really solve in the labor market by lowering interest rates. We also know that the supply of labor is down. The labor force has been declining. The southern border has been shut down, so we're not getting illegal immigration, and deportation seems to be increasing. So that's reducing the labor force, and that would naturally mean that it's harder to find workers. So maybe that'll put some upward pressure on wages. But on balance, given all the things going on, it appears to us that the labor market's still all right and really doesn't require much help from the Fed, if any help. And whatever lowering interest rates will do, it's more likely to cause a melt up in the stock market than it is to help boost the demand for labor. But speaking of the stock market right now, we don't have to worry too much about a melt up today anyways. Maybe when the Fed gets around and cuts rates on the 17th, if they cut rates on the 17th, that'll cause a melt up. But between now and then, we're going to have a labor market number, employment number, and the employment number for August is expected to be something like up 75,000. We're expecting up 100,000. I think everybody agrees that the break-even payroll employment number that we need to have is lower than it used to be because of the changes in labor force. And so we don't really need 150 to 200,000 to keep the unemployment rate down around 4%. Well, nobody really has a hard number on this thing, but I've heard numbers from 30,000 per month to 100,000 per month. We're sort of in the 100, 125,000 camp, and we are expecting to see that kind of increase in the August report. Of course, now we're all very much focused also on the revisions, and it's conceivable that the July number will be revised. It was up 73,000, which with a little bit of glass half full analysis isn't so bad. 73,000 after gains of 14,000 and 19,000 is pretty good. And that's kind of consistent with our view that in May and June there was a lot of uncertainty. So naturally there wasn't much employment and there wasn't um, and then we started to see that the uncertainty diminished a bit. People started to learn to live with it. Business people said, well, whatever happens with these tariffs, I got to get on with my business. My business is good. And they started to hire at a faster pace in July. And if that's the case, we should get confirmation of that with 100,000 or so job gains in August. And that's what we're looking for. And that again might take away some of the argument from, oh, the Fed's got to lower interest rates. And then, of course, there'll be a CPI number, which looks like it's going to come out around 3% on a year-over-year basis. I know that the CPI and PCED, in the past, we've seen a situation where the CPI inflation rate tends to be higher than the PCED inflation rate. But of late, they've been almost identical. And so if we get a 3% CPI, I think that would imply a 3% PCED for August. And 3% is not 2%. And the Fed will have to do some explaining why they felt the need to lower rates on September 17th. Uh, I suppose people are not talking about a hawkish rate cut in the sense that the Fed will cut by 25 basis points, but the language around that will say, we were restrictive, now we're less restrictive. We don't really need to rush from here because we still have inflation more at 3% than at 2%, and we'll see again what the labor market data shows. Um, Then, of course, there's the issue of the courts and tariffs. We'll discuss that in a minute with Jim. There's the seasonal factor here. The market's got high valuation. Gold is soaring to new record highs, which has got to make everybody somewhat unsettled. The geopolitical situation hasn't really gotten much better since the U.S. bombed Iran. Ever since then, we haven't seen any progress in the getting to a ceasefire, let alone peace, between Ukraine and Russia. Meanwhile, the tariffs on India seem to be pushing India closer to China and Russia, which is not what we want to see happen. So a lot of interesting developments, unsettling developments. Uh, on the other hand, the good development is the economy still looks like it's resilient and it's growing. Well, with that, Jim, why don't you come on in?
Thank you, Ed.
Thank you. And why don't you give us a little update on your thoughts? You've nailed it. You've been dead right about how the courts would treat the tariffs. Where do we go from here?
Well, so far so good. One predicts the future with difficulty, as Yogi Berra used to say. I think that there were four parts in the Federal Circuit decision which came out after the close on Friday. Two of them are pretty good. First, there is that majority opinion, and the majority opinion, 7-4, was that the president's IEEPA tariffs are unlawful and unconstitutional. It's a short, straightforward, very simply written opinion, and I think it's powerful for that reason. It's also a good case of an appeals court playing Supreme Court word bingo. They mentioned a lot of phrases the Supreme Court likes these days, like major questions doctrine, textualism, all the key cases leading to major questions. So it's a big fat softball they're lobbing to the Supreme Court to give it the ability to knock down these tariffs definitively. The second part is also pretty darn good. The second part is a concurring opinion signed by four judges, and it goes even further. It plays the same game of Supreme Court word bingo, citing the Roberts Court's recent rulings for its view that that IEEPA allows for no tariffs whatsoever. So again, that's a pretty positive thing. The third thing that is actually
Jim, let me interrupt you. It sounds like you're a Madisonian constitutionalist like me, because
um,
you're putting a positive spin on these things. Obviously, the administration would not put a positive things.
Yeah. So we're getting to that point. I mean, the administration would argue that the destruction of America They literally said that destruction of the U.S. economy, a 1929 style Great Depression, would result in these tariffs beyond. I'm going to say that one thing that on balance is probably positive is that the court, which had issued an injunction blocking the tariffs, got a remand. It has to rework the justification and basically finish doing its homework, explaining why there should be an across-the-board injunction against the tariff and a refund to everyone who paid tariffs. And I think that's good because you always want uh, a ruling like this to be as reasonable. But getting the point dissent, and the dissent was a surprisingly strong dissent. It has four justices, but all three Republicans on the court. Now, you don't want to think of court Democratic having a party affiliation nation. I mean, Circuit Court of Appeals has 11 Democratic appointees and three Republican appointees. But here, all three Republicans went for a dissent written by an Obama-appointed judge, Judge Toronto, which essentially said that under IEPA, if you have a national security issue, the president can do anything, carte blanche. He can do all the tariffs he wants, no limitation on tariff with respect to scope, magnitude, or duration. So I'd emphasize that's a minority opinion. Still, we have 11 out of 15 federal judges have found the tariffs unlawful, but it's a propaganda victory for the like of Peter Navarro, and it is something the administration can point to as a potential roadmap for the Supreme Court ultimately reversing what the courts have held so far.
So how do you think this is going to go to the Supreme Court? I think you were saying that if it turned out that all 11 judges voted against it, that the Supreme Court would possibly pass on considering it. But now you would think that with 7-4 that it is going to go to the Supreme Court?
I think it's going to go to the Supreme Court. There are actually two separate issues here. One is the legality of the tariffs themselves. I think the Supreme Court is ultimately going to rule on that question and has always been likely to rule on that question. There is the second issue, though, and that is can you have an injunction against the tariffs before the Supreme Court rules, or would the Supreme Court stay the tariffs, stay the injunction, and or would the Supreme Court stay the tariffs or not, really? Is the Supreme Court going to allow the tariffs to stay in place while it rules, or will it say no, it's such a likely possibility that we'll rule against the tariffs that will decline to stay the injunction, will allow the tariffs to be struck down, basically. Um, in this case, what's happened is that the injunction against the tariffs has been vacated and sent back to the Court of International Trade to work on the injunction some more. I still think there is a potential off-ramp, perhaps by the end of the year, perhaps early next year, where the tariffs could be lifted sooner than most people expect. And I'm stressing this not because it's the most likely possibility, but because it's the market disruptive possibility. Conventional wisdom would have it that the Supreme Court is most likely to vacate these tariffs at the end of the day, but the tariffs will stay in place until the Supreme Court rules. I've questioned whether or not the Supreme Court would keep a stay on the injunction in place that long.
Mhm. I wonder how importers are going to respond. I mean, they're going to get an invoice from the Treasury Department for tariffs, for duties. And if I'm an importer, do I send a letter to the Treasury and saying, well, that's very, very nice to hear from you, but I'm not going to pay it until this issue is resolved, because right now the last ruling is that these are not legal. Is that a possibility, do you think?
Well, it's not a possibility because the tariffs are in force until you have an injunction that stops them. And that injunction is being worked on at the Court of International Trade. But I think there is a bigger problem that you've identified, and that is that you've got real uncertainty about what tariffs apply. And when and if the tariffs are struck down, the federal government will need to refund these tariffs. And, we're about $150 billion worth of tariffs at this point. There will be more, perhaps 350 million by the time the Supreme Court rules. All that money would potentially have to go back. And there's no, express refund procedure for giving money back to the importers that paid the tariffs. There is a kind of complicated system that allows corrections and adjustments to be made. It is a process that takes about a year. And so your books are basically open with what you actually owe the federal government for about a year. And as they used to say on TV, wait, there's more. A lot of this paperwork, a lot of these customs payments are handled by customs brokers. So you've got these third party middlemen in there that would actually have to cut the checks to the government and then cut the refund checks to their clients. And so even if the tariffs are refunded, it's going to take a while to sort this process out and get the money back to the importers who paid it in.
I have I have a question so far, only one so far.
Yeah,
So the audience is welcome to join in here. But the question is from Ian, Section 232 of the 1962 Act and Section 301 of the Trade Act of 1974 do allow the president authority for tariffs under national security and unfair trade, respectively. Selective but not broad brush. Uh,
correct.
that has, okay, I'm back. You there?
I'm here.
I'm so sorry. Today, I mean, September is turning out to be a tough month already.
Somebody on CNBC said that September, the month of September, is like Monday morning in the financial markets. And
Yeah, it really is. I don't know why that's the case. Anyways, was there anything else you wanted to kind of make sure that our audience, and I appreciate it. I see that most of our audience hung in there with us, so I appreciate that. Uh,
they did. We were just starting a question about Section 232 and
yeah.
301. And, I think the question was about that. Those are very special purpose tools. And Ian is right when he says that they have a narrow perspective. The Trump administration has always said, well, if we can't use IEPA, we've got Section 232 when we can put these sector tariffs in everyone, or we can use 301 and we can do these country-specific national security tariffs. But the point is, what they've done under IEPA is that they've put a universal baseline tariff on 190 countries. They have had so-called reciprocal tariffs on 90 countries. They've done about a dozen trade deals. So it's going to be really hard for them to replicate what they've tried to do under IEPA with these other tariff authorities.
Right. So, I mean, they obviously thought about all these things and figured the fast track was the way that they actually went. They had to know that they were going to get into some legal issues, but you think they just like assumed? I mean, is it a reasonable assumption that the Supreme Court is going to vote in their favor?
Well, I think that they have been taking that bet, and I think there's a perception that the Supreme Court is a conservative court with many Republican appointees, including Trump appointees, and they've been ruling in favor of presidential authority. But generally, what they've been saying is the president is in charge of the federal government, and the president gets to make decisions on things that pertain to the executive branch. This is a little different because it's about taxes and tariffs. It's revenue raising, which is the province of Congress. And, while I think there's cause for worry about the dissenting opinion in this court, the dissenting opinion that says that the president should be able to do whatever he wants under IEPA, if you look at the course of the Supreme Court on other decisions where they've been saying with respect to, say, environmental policy or student loans or vaccination requirements, the ban um, on um, various COVID-related actions by President Biden. They've all said that if the president doesn't have specific authority in the law, he can't do it. So I'd still be hopeful that the Supreme Court at the end of the day would just, follow a narrow view of the law and say that since tariffs aren't specified under IEEPA, since there are other tariff statutes, then the president can do what he wants with 232 or 301 or some other tariff authorities, but these broad-based IEEPA tariffs would probably have to go.
Yeah, I mean, it's a awfully intrusive power when you think about it from a point of view of an individual business. Small businesses, large businesses. I mean, you want to know what the rules are, and you want to also be able to influence the making of those rules. And if it turns out that something this important, which is basically tariffs, taxes, and its impact on foreign relations and foreign markets, it's extraordinarily disruptive to trying to make a living
Hmm.
uh, with the kind of power that entails in the administrative branch.
Hmm.
Well, how about the idea that that over time Congress has sort of like given up on tariffs and given more power to the president? After they passed the Smoot-Hawley tariff in 1930, Congress regretted that they had done that, and they gave Roosevelt a lot of power to negotiate reciprocal tariff agreements. Can the Supreme Court look back in the kind of the history of Congress and tariffs and say, well, Congress really doesn't want to deal with tariffs at all or much? I mean, you don't really hear too many complaints coming out of Congress about what Trump has done with tariffs. So kind of I'm wondering if there's sort of historical precedent where the Congress said, well, this thing's been going towards more the president having more power over tariffs. Is that a way they might be thinking?
Well, they've seen that problem. What I would say is this, that since the Great Depression, tariffs have been the kryptonite of economic policy. There's been a lot of suspicion about tariffs as a broad brush solution to everything. And Congress has generally given the president very specific authorities to use in multilateral trade negotiations, establishing the WTO, and so forth. And I think Congress has been less involved in tariffs just because there has been less use of tariffs on this scale. Now, something else that's been happening in Congress over the last 20, 30, 40 years is that Congress has generally passed vague statutes or declined to update statutes like the Clean Air Act or other regulations, and they have allowed the federal government to work through administrative regulation, sort of a European style rulemaking, which is how you get, a lot of these other, regulatory mandates from the federal government. There is a Columbia law professor named Philip Hamburger who's written a book called Is Administrative Law Unlawful? He has been a big critic of this effective delegation by Congress to the executive branch to make the decisions that Congress should make itself. And Justice Roberts, the Roberts Court, and their major questions doctrine have been following the line of this argument from Philip Hamburger that Congress needs to make these decisions again and reassert its prior power. And Philip Hamburger, incidentally, is one of the key legal minds who's driving this litigation against the tariffs. So basically, an outcome might be that the Supreme Court tells Congress that if you want to be involved in tariffs, you need to be more clear about your intentions.
Hmm. Well, we've run out of time, Jim. I really appreciate that you joined us. Jim Lucier was good friend. He's been with us before. Jim and I worked at Prudential many years ago. He's got a bunch of partners that put together a Washington research group called Capital Alpha. They do an outstanding job. Just look them up, Capital Alpha Partners, on the internet, and maybe you'll find that their research is of value to you in managing your portfolios. Jim, thanks again, and I'm sure we'll ask you to join us at least once more, depending on what goes on this subject, depending what happens with the Supreme Court. Thank you.
Well, thank you, Ed. Delightful to join you.
Thank you. Bye bye.